And today I'm going to be talking to you how you can become a swing trader and how you can actually earn a living, and not only that, but increase your wealth in trading just 10 minutes a day. Before we continue, I just want to remind you that everything that we're going to be talking in here is for educational purpose only and should not be construed as investment advice. And if you really need advice, consult your financial planner, advisor, or broker. All right, so thank you, Reed, for the presentation, but I really need to add some more facts to the sheet. So I've been a professional independent trader for more than 10 years now, and my focus is on equities. I do trade on a daily basis equities. At times, I do trade futures and currencies. My emphasis is more on swing trading and investing, and I'm proudly saying that I'm kind of retiring from day trading, so I'm not glued as much as I used to be to the computer, the monitor. So I have over a decade of investment banking experience prior to becoming a professional independent trader, and I've worked in financial investment institutions throughout Europe and US. I've also founded TradeOutLoud.com, which we'll hear a little bit more about it later on, and I founded it in 2011, and it is a day trading and investing education and service firm located in Detroit, Michigan. We do a lot of classes online and on-site. I also run a managed accounts program for a group of high net worth clients, and I also run a swing and investment signal service for equities. And basically what I'm doing here is that I am carbon copying most of the trades. I would say 95% of the trades that I take in with my fund. I'm also a designer of a proprietary trading system that is based on price support resistance, that is correlated with charts and precise trigger times in the market, so you don't have to stare at the screen 8 hours a day. Also, with a strict set of trading rules, some of the rules we're going to be talking about here. So like I've mentioned before, TradeOutLoud.com is a trading education firm and also a service firm. So we do offer a lot of on-site classes. We do offer a lot of online classes as well. You can see that we have a wide participation, actually a worldwide participation. We try to keep our classes rather small, 25 to 30 people when we're offering education classes. So just we make sure that everybody is up to speed with whatever we discuss, and we don't leave the class until everybody's like fully satisfied with the content. Also offer live coaching and live trading within the coaching sessions during market hours, which is very important because we do that as the market progresses. We don't do it over the phone. We don't do it over Skype. We hop into a room just like this one, and I get to share the screen. I get to share my platforms, and we pick it up from there. Also, trade alerts for those of you that are interested in swing trading alerts. We also offer that, and also custom trading plans. So for those of you that are new to trading, for those of you that have been trading for a while that still did not find your niche in trading, this is a perfect vehicle for you to start with consistent profits by having a custom trading plan. So it funnels all your attention on only a few aspects of very, very important. So this is not something that basically a trading plan that tells you, what to do, like how to do it, but I actually tell you what to do. It's my personal trading plan for day trading, for swing trading, and for equities and for futures. So you're probably going to wonder, why should I listen to Trade Out Loud and why should I listen to her? Well, I have a transparent track record, and since I've started with Trade Out Loud, so since 2011, and anybody that wants to look through our track record is happy to do so. Just shoot me an email. I'll be very happy to provide you with some links so you can see all the trades that we took over the years, the good, the bad, and the ugly. But overall, on every single year, we came above 30 and 40% return on investment. So if you had I don't know, $100,000 account at the end of the year, you would end up with 30 or 40, or at times even with $50,000 in that account. So all double, not double, but half of your account. So Last year, actually, we've hired an outside company that would track our performance for more credibility. So since January 1st until December 31st last year, we've hired this company that tracked all our trades, and this was based on an account of $100,000 buying power. So that is kind of like a median size account. So that's why we wanted to kind of like refer to all the traders. So we would get full transparency in all our trades and our strategies. So at the end of the year, we ended up basically with 34% return on investment. Average gain, we had actually 3.2, and then realized it was, like I said, 34%. You could see here the average win as of December 5th, and this was not even, this was just the start of the very powerful year-end strategy that we have during, you know, for our portfolio. So we do have the window dressing, which is very important at the end of the year, January effect, Santa rally, and et cetera, et cetera. So that actually bulks up a lot of our account right now. So we ended up, we beat the S&P 500 for the 4th consecutive year in a row, transparently speaking, since the inception of Trade Out Loud. And you can see some of the trades that are here. Okay, so let's start. Here's our agenda for today. So how to accurately spot opportunities in any market condition. And I'm not going to lie, I'm going to tell you that this is a very tough year to trade and has been very, very tough, with the market being sideways for a relative long period of time. So there are some things that you can actually go by and actually read the trend correctly. So we're going to do this today, and I'm going to show you some of the tricks that I use in order to find trades, high profitability trades. I'm also going to be talking to you today about some intelligent stops, entries, targets, and of course trailing stops, where you actually book your profits so you don't let your profits dry out. Because the worst thing that you could do is have a trade that triggers, you see it in the green, you see it run towards your target areas, and you don't do anything. So this is a proactive approach to what needs to be done, and some simple steps, and you know, you could write them down. They're very, very easy to follow. But before that, you know, I know that there are some people in here and some traders in here that perhaps are not acquainted with what swing trading is, because I do get a lot of questions every single day, because I talk more and more about swing trading, and they're, you know, they're asking, what is swing trading, okay? Because you know, to be very honest, in our days, you know, day trading is very, very popular, and most of the traders are focusing on day trading. Well, swing trading is actually the sweet spot between day trading and position trading. So day trading, what is day trading? You're trading those small time frames, all from the 1 minute chart to 2 minute chart, or some traders do 3 minutes to 5 minutes to a 15-minute chart. And position trading means you're focusing your trading on really large time frame charts, such as the weekly chart or the monthly chart. So that's basically investing. And it generates high profitability trades, and it offers the best chances of success. I gotta tell you, swing trading is actually really profitable. It's more profitable than day trading. I have been a day trader. I still day trade at times, but I have to tell you, swing trading is profitable. And why? Because once you focus on higher time frame support, resistance level, for instance, if you're in a long position in a long trade, support levels on, let's say, daily charts or even hourly charts are more likely to hold than other time frame charts. You're less likely to stop out of trades that trigger off the daily chart than you are of trades that trigger on the 2 minute chart. So as a day trader, you know, you probably focus from 2 minute chart, 5 minute chart, not unless you're a trend trader and you focus more on the 15-minute chart, but you get more stopped out of those time frames than you are of these large time frames. Okay. There is a focused time frame for you to look at, and you're not going to go all over the place, so it's really nice and narrow. You're going to be looking at, okay, you're going to be looking at the 30-minute chart. So I got to change a little bit here. So you're going to be looking at the 30-minute chart for really aggressive early entries. You're also going to be looking at the 60-minute chart or the hourly chart, and that is also going to provide you perfect entries that are going to be in sync with the daily chart. So these three time frames, 30-minute chart, 60-minute chart, and daily chart. So these are going to be your three major focus time frames. So who is this, if you're asking yourself, what is swing trading, how is it going to, affect my day-to-day life? Well, with swing trading, you don't have to be glued in front of the computer. There are certain times you can scan through the weekend and just place the trades even during the weekend, and you can find that they trigger throughout the week. So it's an very easy way to take trades, to initiate trades, place stops, and set it and forget it. And it's the perfect solution for those of you that have jobs, have busy schedules, for those of you that want to trade your IRA accounts or long-term accounts, savings accounts, etc. So in swing trading, you're going to be looking to hold positions from 2 days to a couple of weeks, or sometimes more, because I'm going to show you some trades that I took earlier this month. Or even I have swing trades that were initiated in April. And why is that? We're still in those trades because those trades held through the market's choppiness through a strict selection criteria. They were selected through a strict selection criteria. And of course, in a choppy market environment, they're not likely going to advance. And if they hold support levels, they're ready to go higher if the market should continue higher. And with the market continuing higher into yesterday and today, we saw a really nice advance of some of the trades, and I'm going to share with you some of these trades that I took during May and of course April. So perfect solution for those of you guys that are really busy, really don't want to occupy your time with trading, or really don't want to stare in front of the computer most of the time. So we're going to talk now about some intelligent entries, and I think one of the most important things in trading is finding a perfect entry. First of all, you are not going to be chasing any stocks, and you're not going to jump in a stock just because you see the market rally and you see that the stock has started to rally. No, you have to wait for a really optimum level for that stock or even ETF in order for you to initiate the trade. So what is the buy pocket? Because that is the kind of setup that I look for, and it surely looks like a little pocket and like a little U shape. And I'm going to show you how that looks on a chart, because I have plenty of chart examples and also plenty of live examples that I have my platform right up, and we could just because I think we do have a lot of time left, and we could go through a lot of charts. And if you guys have some questions, and if you want some stocks that you would like to have my take on them, you could just post them in the room, and we'll review them a little bit later on. So we're going to focus on these buy pockets. These are very, very important at interest levels, interest zones, what I call them. So an early entry point for a long position within a potential leading stocks consolidation or basing pattern. This is what we're going to be looking at. When utilized as an entry within a consolidation or a base, it provides an early mover. And this provides a true advantage to the investor. I'm going to show you real quick an example right here. This is what I'm referring to. You have Netflix here. This is the daily chart. You could see that Netflix had gapped in January. It had a really nice ride to the upside, and then when it pulled back right here into the prior support level zone, which makes it very appealing and very good for a continuation higher. Now here's the thing, if you have been trading back in March, this was a perfect entry opportunity right here, this perfect entry opportunity would have offered you a perfect reward into a prior resistance area for a target. Okay, now let's say if you've missed this opportunity right here and the stock immediately gapped up, and you could see that it gapped up on April 16th. You could see the date bubble below, and then it rode a little higher, and then it pulled back. Look at the pullback, very, very mild pullback right here. So what I'm looking for a buy pocket. I'm looking for a consolidation area at an interest zone. So for a quite relative long period of time right here, right, above $550, which is also psychological level for these stocks. Okay, you see that it formed a heavy support area. As well, resistance area right here at 574. Approximate area. Now, if you're an aggressive trader, you're going to look for little buy pockets right here like so, or like so here, that can actually provide you a stop level and a very good entry level, and by the time it breaks the base, it can offer you a really good profit. And then what you could do, you could take half of the trade here aggressively and add the other half on the breakout if you wish. If not, you can go towards a more conservative approach. And what I mean by that is you could actually go for the breakout, okay? But remember, in either case, your stop needs to be below a hefty support level for a long position. And look at this beautiful breakout that happened right here. Okay, so really nice follow through, a little mild pullback right here, and look where the pullback is, into a minor support area, found support right here at $556.50 with a beautiful gap up that occurred on the 15th with a follow through on, so this is what happened on Friday, this is Monday, and this is Tuesday, a new high on Tuesday at 628.50. So this is the trade that I took. So beautiful, this is what I'm looking for, like these beautiful pockets or consolidation pockets like so. Okay, and what I'm going to do here, okay, here's the pocket that I'm referring to and the consolidation that I'm referring to. You actually bracket this with support, resistance, and a breakout higher can actually provide another continuation with good fluidity to run to the upside. Okay, so this is what I mean by a buy pocket with a consolidation or a base. These patterns provide really, really good accuracy for entries. The other thing is a continuation buy point for a leading stock that is already firmly formed in a strong uptrend. Now, this offers both a way to get on board strong leaders later on in their uptrends, as well as an extremely reliable and powerful tool for adding to positions and initiated earlier when a stock was still within or just emerging from its original consolidation or basing formation. Okay, so what I mean by that is that along the way, the stock is going to offer you opportunities to add more shares, or if you miss the first breakout opportunity or the buy pocket, alternate entries always. So a winning stock is always going to offer you those opportunities like so. So you have the gap up here, okay, you have the range that has the velvet here, you have the breakout, and then you get this pullback. So this pullback right here can actually constitute another entry level or an add level for the present trade. Okay, so I'm going to mark it right here, so like so. Okay, this is it. So this is your entry number 2. This is your entry number 1. If you've missed this entry, this would be actually an alternate entry, or if you are in this trade, this would be a good add opportunity and a reduced opportunity right here. So you add more shares above 594, above this peak right here, or in any setup that forms around here, place your stop below this support level right here, although you had initially a stop level at 551.80. Okay, so this is what I mean by a buy pocket. All right, so Here's another example, and this is another trade that we've done earlier this year. IWM was quite bullish a few weeks back. And as you can see right here, okay, this is the initial breakout, and this is a beautiful buy pocket V formation. So you have the pullback right here, tested the 200 period moving average. You have a really nice bottoming tail that developed and actually suggested that you have more buying power coming in and more buyers coming in. You have a rising volume, and this is what you get out of it. You get a beautiful breakout and a beautiful continuation higher. Now, you've missed this area because we've talked about, you know, how stocks love to test prior areas, and again, you have a pullback right here in the 20 period moving average, another buy pocket developing here, and a push higher, two new highs right here, and then you get a pullback again, another entry pocket that is developing and pushing higher, and again you get another pullback. But please note that all these lows right here that you see, these ETF lows that you see right here, they're rising. Okay, so these higher lows right here suggest an ascending move, an ascending potential continuation higher for IWM in this situation. So you have alternate entries. By the way, this is a daily chart right here, and you have alternate entries for all these opportunities. So you have an entry here, you have a beautiful follow through to the upside, you have a secondary entry here in case you missed this one, or in case you want to trail it here or add and reduce. So if you're keeping this trade for a position trade, for a core trade, meaning for a longer period of time, what you're going to do is you're not going to get in and out, but rather you're going to let it pull back. You're going to wait patiently until another natural level of support level is formed and takes out again. And this is where, below these two candlesticks, this is where your new stop is going to be. You could either have the option of adding more shares and basically adding the profit that you've made from the entry to this peak area right here, and then you can add more shares right here, taking it higher, and again, pull back. If you're trailing the stop, if you're trailing this ETF, then your new stop level should be below this candlestick right here. You can either add or initiate it as a new trade before continuing higher. So here you are going higher in this trade, new high 127.13, and continuing higher. Okay, now here's another example of BA. This is also a trade that we've done and actually picked up the stock right here into this area. So what we've noticed in here that it has been basing for quite some time and it's zigzagging along with a pretty much same support level and resistance level. So as you can see right here, it bounced from a low of 116.32. It continued higher and it formed a resistance area before it pulled back, testing the prior support area, yet finding slightly higher support before continuing a slightly higher, pulled back again, and this was the first sign of the reversal. The secondary sign was a test of prior resistance, and this was my interest zone right here. So this was my buy pocket right here. If you're an aggressive trader, you could actually go by this area right here and buy this pocket right here. So the first buy that happened in this very day right here is your entry. Your stop is below this lows candlestick, and remember, give it a little bit of wiggle room because you need stocks, ETF, and whatever you're trading, whatever asset you're trading, they need room. They need a little bit of breathing room. They need space to develop. Don't actually squeeze them and don't choke them because they hate that. They're going to stop you out. They get really impatient and nervous. They're going to stop you out before continuing higher or lower. So before you do that, and make sure before you give it a little bit of wiggle room, make sure that you know really well your support resistance levels, and make sure that you really know how to identify trends and trend reversals. All right, so here's the entry point right here at the breakout. If you didn't get in at this breakout right here, okay, you could have waited Okay, and you could actually pinpoint the entry into this area right here, secondary entry being right here where I actually have my cursor right now. So you take it right here, long, beautiful breakout into a new high for the year that was in February right here, and it pulled back, but look at the ascending pennant that is forming here. This is another sign that BA is ready to go for another high. This was, by the way, a beautiful trade that we've done in February. New high at 158.83, and it happens really fast because we know where to get in. We know the interest zones. We know how to correlate interest, trader's interest with really interest zones, as zones where institutional buyers are looking to leg in. So that is very, very important. So that's what you need to look for, institutional buyers, because that makes the big volume. All right, so that is going to give you these beautiful triggers, and you're not going to sleep. You know, it's not you're because sometimes you get in a trade and it's just like watching paint dry and nothing happens. But you really don't want that. In swing trading, what you want to do is you want to pinpoint the exact timing with the exact location, with the exact interest that match institutional traders, so you could get to higher targets faster, right? To book your profits sooner. Here's another beautiful breakout about to happen. So if you have been in this trade, I'm pretty sure by now you would have your stop trailed under this candlestick. A beautiful breakout again to the upside. Note the pullback into prior resistance area right here that it translates now into support. Another breakout to the higher, another test of support. So beautiful W pattern before continuing higher. So another example of a beautiful buy pocket at interest zone. Also, what you need to look for is, and like I've mentioned earlier, learn how to identify the trends correctly. You could actually help, you could actually get a lot of help if you draw some lines on the chart. Equidistant lines, trend lines are really helpful. All the platforms have these capabilities. You can draw these, and then again, they're going to give you optimum buying areas, and this is very important, like I've mentioned again. This is an example of CME. This is actually a daily chart of CME, and these are the trend lines, and this is ascending superior trend line. Of course, this is ascending resistance trend line. And these rising trend lines that I have in the chart are going to act exactly as support and resistance areas, like we've mentioned before, you know, resistance and support, but only they're ascending. So please don't neglect them because they offer great great entry opportunities. So buy pockets right here. These are intelligent entries right here. When other traders think, oh, this, you know, this stock or this ETF, you know, I don't know, it's going down. You know the exact location because it is residing on the ascending support trend line, and you know that this is a really good buy pocket area. So here it is, buy pocket pushing higher, pulling back, another buy pocket forming. So if you are a swing trader, this is going to be your entry. And again, you're going to look for the first sign of reversal, and on this red candlestick right here that takes out this pocket right here, so you can see another sell pocket form right here, you're out. So you have been in the green for 1, 2, 3, 4, 5, 6, 7, 8 days in a trade, in a swing trade. So that is, you know, probably from $68 to about $74. This is going to be your profit. The stock is pulling back. Now, if you're a longer term trader, position trader, or a core trader, you're going to look to still stay in this position if you have strong signs that the stock or ETF is in a very strong pattern continuation, and you're going to stick in. What you're going to do is you're going to wait for a pullback. You're going to wait for the stock or ETF to form its natural support level. Like I said, you need to leave them be. Let them pivot before you even squeeze, you know, any profits out of them. So this is going to be your stop right here, and this is going to be your continuation for higher. This is going to pull back again into the ascending. So pretty much like a little bit of descending base right here, but still pretty much a strong base. And again, it's residing into this ascending trend line support, which means that it's going to power to the upside. Look how powerful this is. Another buy pocket in the ascending support. Right now, what you have on this chart is these rising bottoms, okay, that actually you have two or more or three, two or more, actually you have three here that actually suggest that a strong continuation of pattern is in effect. So here you are, beautiful, tight, really, really tight entry with a beautiful continuation higher. Look at this beautiful, beautiful move to the upside, okay? So this was from about $73, $74 all the way into like $82, $83 right here. So beautiful, beautiful move to the upside. Now, on the first sign of reversal, swing traders, you're going to be out. For those of you that are investors, you're going to look for another clue off, you know, you're going to look for another clue off the ascending support levels where you are going to actually place your stop loss for a continuation higher, because what you're going to do is you're going to have minimum involvement on the chart. So another buy pocket develops here for swing traders. Cluster, beautiful continuation, cluster breakout to the upside, mild, really mild pullback, alternate entry actually forming right here above the $80 area with a beautiful continuation higher, taking out the previous high, setting a new continuation pattern, so which gives us more clues that any pullback is viable. So in a very strong trend, any pullback is viable. Okay, another cluster forming right here on the ascending support trend line, moving higher. Now, if you're a swing trader, this would have been an out for you right here. So you would have been out of this trade. But again, look for another opportunity and another buy pocket. So whenever you're in a winning trade and you booked your profits, do not abandon that stock, because that stock is likely to continue on giving. So make sure you focus on it, because here we would have had an alternate entry, even though you would be out in this location after this red. Remember, this buy pocket with a 3-day consolidation off the 85 whole number area with a pop above, I think it was around $86, continuing higher over $90. $90 would have been your trail stop for a swing trader. This is where you would have gotten out, pull back into the $85 area again. Again, beautiful right to the upside, sell. This is where swing traders are out. This is where swing traders are going to look to get in again, double bottom right here, again off the $85 area, major support level with a beautiful continuation higher, taking prior high, meaning there's more upside to it. So there are a lot of opportunities. I just want to show you real quick, even though I've mentioned that this is for swing traders only, how to accurately spot opportunities in any market condition and even in intraday, because I know some of you here might be day traders as well. So here's another cluster opportunity that arises. And by the way, for those that don't know what these dotted lines are, these are daily pivot points that are automatically generated on the chart for you. They're not floor pivots, so they are daily pivot points. This is a Thinkorswim platform, by the way. Blue moving average right here is the 20-period moving average. For intraday trading, for day trading, I use the 10 exponential moving average, which is more accurate for reading the trend, and especially strong trends throughout the day. And the red moving average is the 200-period moving average. So right now, cluster formation at the medium pivot point with a beautiful move to the upside into another area of resistance right here. And again, these pivot points mark areas, mark areas of resistance. Okay. All right, let me just go through the slides real quick. Okay. All right, here we go. Okay, sorry about that. I don't know why it's not working. Okay, here we go. All right, so another buy pocket of formed right here for a continuation higher. You can see that these buy pockets form everywhere, whether you're a day trader, whether you're a swing trader, or an investor. Okay, here's another example, and this is how to accurately spot, again, entry opportunities. This is Santa's. This is a daily chart right here. Okay, so first of all, what you need to look for is a trend, right? So you need to identify a trend correctly, and I've mentioned this at the beginning of the session. Know the ABCs of trading, of technical analysis, and this is reading a trend. You have to have, for an uptrend, you have to have a succession of higher highs and higher lows. This is mandatory. So, and you need to have this on higher time frame charts. So you need to have it on a daily chart, you need to have it on a weekly chart, you need to have it on a monthly chart. So if you have those, you could swing trade, you can day trade long for that particular day. I'm not a big fan of counter trend trading. So, okay, so here it is. Once you identify a trade, if you're using moving averages, make sure that these moving averages, you know, and usually parallel moving averages suggest power trend development. So you could see that here there are a lot of crossovers and there's a lot of indecision, as well as relative low volume right here. So there's not a lot of interest. But what you can notice right here is that price gap up, and it's actually residing towards this resistance area. When the price gaps up, and when the price really trades in the upper half of this resistance area, like it trades in this location, you really should expect a move higher, because it means that it's eating up all that resistance to the left-hand side and it's ready to pop to new targets. So here you have it, a lot of opportunities that arise off the 10 exponential moving average and even off the 20 period moving average. Again, this is a daily chart. Remember, these support levels that develop on the daily chart, on the 16-minute chart, and the weekly chart, they're very powerful, and they're very less likely to stop you out of a trade. They're really reliable. Remember, they're more reliable than minor time frame charts. So here are some footprints that you need to follow. So first of all, as a retail trader, as any professional trader, we need to follow the big footprints of big institutional traders. Okay, so this is us right here with the small footprints. We're not going to go counter trending when these guys are going the other way. So we all need to synchronize our footprints to go on the same path. Institutional buying creates these base breakouts. They're very powerful. I'm going to come with more examples from last week's trading. Institutional buying occurs when within consolidations and during those really strong uptrends, and these are called areas of accumulation. They're very strong. The buy pockets form in these consolidation areas and provide a clear buyable point with clear support resistance levels, and also they offer very high odds of follow through. You saw Netflix. Now that is institutional buying. Since that first gap up that occurred, they have been accumulating. They have never, even though the market was choppy, they have never abandoned their positions. You have not seen institutional selling, and you have not seen a lot of institutional selling on some of the stocks, and this is, you know, another topic for another discussion, but, you know, with the sector rotation. But you need to focus on what is moving and what is strong, because what's relatively strong in a sideways market and in a market that is choppy, and at times it suggests that it might go to the downside, these are the stocks that you should focus on, because there are no sellers. Nobody's interested on selling those particular stocks. Okay, buy pockets also provide a tool for buying leading stocks, ETFs, as they continue higher with a strong trend. Now I'm going to give you 7 rules that I follow on a day-to-day basis, and these are some of some of the things that I truly believe in and that make me successful at what I'm doing. First of all, trade stocks that have a relative high volume. Okay, relative high volume. Look for an increase in volume compared to the to 10 days. So what you need to see at the bottom of the chart is an increased volume. So I'm going to pull the chart right here, okay? So what you want to see is an increase in volume. So you can see how the volume was relatively flat ahead of this gap up. This is what you want to see. You want to see a slight increase in volume. And this was the first clue right here on 413 that the volume was peaking up a little bit, right? And then here at the first gap up. Now this is a lot of buying right here. Okay, and on the other hand, look for not only for that volume, but also for daily traded volume. I never trade any kind of stocks or ETF that trade below 1.5 million shares traded a day, ever. No, so not unless, you know, not unless I decide, you know, to take some really, you know, I would say fun trades, fun shares with that, and you know, just test the waters with that stock. No, you're not going to trade thin stocks, because you want really liquid stocks, and you want institutional power to be on your side. You don't want to be alone in those trades. Okay. Also, stick to stocks that have a pattern, that have patterns of beating earnings, sales, and ETFs as well, that look for fundamentally strong and solid stocks. Look for stocks, for instance, if you're looking to initiate a swing trade, you're not going to get it just based on a pattern. Okay, you're going to study and see what, if everything around that suggests that it can actually have a fluid move to a hard target, right? You're not going to trade, I don't know, a stock like, I don't know, like Gap, right? Or Guess, all right? Because really, it doesn't have, you know, much chances of follow through, you know, $10 follow through or $5 follow through to the upside, right? I mean, how much can they increase their sales? So bottom line is, look for stocks that have a pattern of beating earnings and sales, and for fundamentally sound. So do a little research if you're doing it on your own, and this is key right here. Also, buy pockets are often formed from base breakout patterns, but also from gap patterns. So be sure to be on the lookout for gap patterns as well. Remember, the stock that I've showed you, Netflix, I'm going to show you more stocks in just a few minutes, after the gap up. So if you are not buying this gap up here, although it had beautiful entry point off the 15-minute and off the hourly chart, wait for this, wait for a pattern to emerge. Don't just jump in, okay? Buy pocket locations. So it is very important where you buy it, okay? Where you buy it. And if you're serious about your trading, you don't just jump in, or you see a really nice, you know, you see a pattern and you jump in. No, you have to look at the location. Preferably, I would look to be above the moving averages. Like I said, I'm not a fan of moving averages. The only reason why I use them is because they give me an insight of what other traders might be doing. And I want to have a lot of traders on my side. So if I see a stock that is in a strong uptrend, pulling back to the 20-period moving average, that catches my eye. So I'm going to focus on that stock. But if the volume is increasing and building up at least a few days in advance, then you can consider that area as a buy zone. So that is an interest zone for me. Past prior support resistance area always are going to be an interest, and that translates into influence zones for future price action. So that's very interesting. So remember, price has a memory, and once price breaks through, let's say a number, let's say $55.20, it rises higher. But if that $55.20, it just stopped, it halted, and then it just pulled back, and it formed another buy setup and then continued higher. At the breakout and on a comeback, it's more likely to test that $55.20 area. So be very careful and look for those areas. Remember, price does have memory, and those areas are most likely to be tested, and more setups can develop off those areas. Do not buy any pocket in any stock that is into a severe downtrend, like I don't know, more than 6 months. Not a big fan of counter trend trades, and wait for the stock to bottom out before and give you proof that it can actually go higher. Remember, reading correctly the change of trend. That is a really good rule to go by. So remember, apply that rule. Does it, does it correspond all the parameters for the change of the trend? Let's say on a daily chart, if you're looking for a position trade. So if it does, then that's where you're going to look, and you're going to take that trade only if it corresponds. Also, some stocks and ETFs that are trading below the 89 and 200 period moving average. If you're a swing trader, you really want to stay away from that. And sharp pivots, also a very interesting fact. I found that sharp pivots have an increased risk of failure than rounded bottoms and consolidations. Now, this is a stock that, and this is a trade that we've done, and AET has been basing for a long time before taking off. And just want to show you the chart where it is right now. So this is our entry right here, right above this resistance area, and this is where the stock is right now. And today, new high at 114.61. So remember, what you need to do is you need to match. You need to match exactly fundamentals, because you need to know about earnings. You need to know about all these things, not only chart pattern, guys, because you would actually you're not going to be as successful. So do a little research before you swing trade. A lot of buy pockets formed on AET before this big breakout right here. That suggests that the stock is actually going to run higher. So you can see 1, 2, 3, 4, 5, 6, 7, 8 before this major breakout that happened right here, all the way to 114.61. I do have one of the last targets is at 115, but it does have projections for 125 for a core position, so that's going to make a really good trade. Humana as well, beautiful gap right here developing. You could see 180, 190, 182. Again, another base. Another example of two buy pockets that are forming. Look at the location in the vicinity of the 20 period moving average. You could see really nice, really volume that has started to rise in this location. Another buy pocket right here. Beautiful. Okay. Tiva is another example, another trade that I've done. $56, hefty support area with a breakout above $57 and change. Beautiful breakout to the upside. This is our target, $61.90. All these are daily charts, by the way, swing trades. Okay, here's another example with a beautiful profit right here. So if you don't have a large account, look for stocks like, let's say, like Sprint, okay, like we have right here, Sprint. And this is a trade that I've done back in January. You could see entry was at $4.15. Stop below $4, 15-cent stop. Target one level, okay, $5. This is $5 area, $5. It hit $5 right here. Okay, for 5.6 stars, if you would have risked $1,000 on this trade, you would have made $5,600 right here. $5,600 in about 2 weeks, 2 to 3 weeks. Okay, if you would have stayed in longer at $5.50 for 9 hours, you would have doubled it, more than doubled it, and made $9,000. Less than half, $9,000 at 550. Okay, so look for these kinds of trades. I'm going to give you a quick glimpse of my current portfolio and some of the trades that I have on right now. And these are some of the stocks that I'm in right now. I'm going to show you Nike. Nike is one of the trades. I picked it up at 101.50. I just want to show you Nike right here, where Nike is right now. So what a beautiful base breakout right here. New high yesterday, 105.50. Okay, 105.50. All right, I do have a trail stop below 104. Again, I'm not choking it. I'm letting it wiggle. All right, it needs to found its own support level before moving higher. Okay, look at the support level right here. It's very important when you place your trail stop, you place it at a correct location. Where am I placing it? At $104. What is this? Not only that this is a whole number level, and of course I'm picking it a little bit below this whole number, but it is into a minor support area, translated from this peak high right here. So very important location. Okay. Another trade, AET. We talked about AET, Sirius Satellite. This is a very slow mover. IBKR, again, a beautiful run. It actually hit target 1 today. Again, for those of you with smaller accounts. Okay, IBKR, $35 is the entry. Another breakout off $35. You can see the high today, $10, okay, $36.10. JP Morgan actually hit 2 targets. Our entry is $64. Just going to put the chart real quick. JP Morgan. Okay, $64 on a breakout right here. This is the buy pocket that formed. It proved $64 is the entry. It printed today a high of $67.19. So these are the kind of trades that are going to bring you a lot of green. Netflix, you have 2 targets that are hit, and Tesla actually hit target 1. Another beautiful trade is Tesla. Okay, with a beautiful breakout right here that is happening in Tesla. You could see the breakout, beautiful move to the upside. You could see $250 and about 65 cents for the high in Tesla. Okay, we picked up Tesla at 238. Okay, so right now trading over 250, hit 250 today. Okay, another trade is Kroger and KR. I just want to pull real quick some of these charts just to show you. Okay, Kroger, again, beautiful pullback. Okay, this is the buy zone right here where I picked it up. Okay, this is the buy zone. This is the alternate buy zone right here that you could actually get it. $72, KR over $72. This is the stop, $71 right here. Beautiful room to trade all the way into this high of $77.74. Okay, so it just started its ascent. Right? Beautiful, beautiful move to the upside. Okay, and many more. Okay, here's the example that we've been talking about, and these are some slides from yesterday that I took last night. Actually, Nike, you saw that $105 today. Tesla advancing. Kroger, we talked about it. AET, beautiful move to the upside. Now, guys, if you want to stay in touch with me, remember, send me a question, any question you may have, to info@tradealoud.com. If you have a specific trading question or about one of the services that we offer, questions at tradealoud.com. Also, visit a Facebook page. We post a lot of free trades there and events that we do. And if you would like to receive signals, you like to wake up every morning to find out that, okay, there's a post at 9:58, Tesla target 1 hit at 250, Netflix target 2, $600.30, IBKR target 1 hit at $36, Nike, the stock where JP Morgan close to target 2 at 67. Actually, later on it did reach target. Some of the other examples, Nike stop, look at the trails. This is what will receive, like to receive charts with trades, with explanations. Okay, service is the swing trading alert service for maximum profits. Remember, we trade technicality trades. We also use fundamentals. That's why we really high success rate. Our portfolio is up over 42%, and it's only May, half of May. Okay, if you want to trade it with us, and only if you those of you that are about making money, okay, you can carbon copy our trade. We're going to see 5 trades every week. Usually you're going to receive 5 or more trades, 5 or more trades. So you're going to receive 5 trades on Sunday in a newsletter. They receive a lot of market commentary, what the market is expected to do, levels, predictions for the current week, for the upcoming. You're going to receive exact entries, stops, targets, and management for you for all your trades. Also, you're going to have live meet Tuesday. You're going to receive the weekly newsletter. You're going to have direct access to me towards the trades that we're in, and actually for some of the trades that you need help with. That I to find out more about this program, and it's actually much more than I'm telling you. You can find out more at tradealoud.com/trade alerts. I have $9 a month, but again, guys, this is for serious traders only, and it is a closed group. You're going to receive trades. Most of these trades, those 5 trades, you're going to receive via letter. They're going to have charts. They're going to have thorough explanation on why you are initiating the trade, either long or short. You're going to receive a precise entry, precise stop, target, and trailing updates. And you're also going to receive trailing updates and updates throughout the day, at least 4 to 5 updates per day. You can receive them on your smartphone, tablet, desktop, whatever. It's a $99 intro, and it's only a 24-hour open window. Then the price goes up to $200. So again, guys, it's for those of you that are serious about making money. Okay, so now if you have any questions, I'm open to any questions. If you have any trades that you would like me to look at, if you would like to have my take on it, I would be very happy to share. All right, no questions? Oh, okay, I just got the questions right now. Oops, sorry. Okay, I'm going to go there real quick. PG. Okay, I didn't see the question window. Okay. All right, PG right now, it's in a severe downtrend onto the daily chart, as you can see right here. Okay, we don't have a confirmed uptrend yet. This stock is still may still continue lower on a break of $79 and change right here. Can actually take it more to the downside. And actually, let me see. Let's go to the weekly chart. It's still on support right here. So the weekly time frame, it's going to be in a really tough situation. The weekly is still in an uptrend, testing support right here. I would watch over $81 to see what the reaction is. This would be, and again, a very, very aggressive entry due to the fact that we do have multiple lower highs and lower lows right here. This is going to be a really tough one. I'm really not going to be interested in picking up any shares of PG long right here. The price is residing below the 200 period moving average. Not a big fan of this. Weekly chart. Yeah, so just a little bit of buying below, although you know, a break of $81 is still into a heavy resistance area, so it might peak a little bit to the upside to see if there are any if there's any interest, and then it can just go lower. I really don't like it as of yet. Okay, let me just no, actually, this is not. This is a special offer. Our subscription is $200 per month, and this is not for a month. This $99 is actually going to lock you in for the life of the subscription. So if you subscribe today, you're going to have an ongoing subscription of $99 per month versus $200 a month. So it's a 50% off type of deal. Facebook. Okay, Facebook on the daily charts trying to form a buy cluster right here. Very interesting area because on a break of $82 right here, and I would really wait for that whole number test. On a break over $82, there can still be followed through. And again, you're going to look for a strong market and a strong continuation. You might have a chance of follow through to $85. Place a stop below $80, and it actually suggests that it has room to continue higher. I really like this cluster right here. So over $82, I would actually take this for a long. Yes, I provide exact stops too for the trades. So when I post a trade, I post the exact entry. Like let's say, for instance, let's use this example right here. So I would say entry over $82. So that would mean that you would have to have a bracket, and you're also going to receive the trading guidelines with all the explanations. So that would actually be you receive the entry, let's say $82. You're going to receive the stop under $80, and you're also going to receive the targets along the way. And if the stock is at all-time highs, you're going to receive projections for, especially for those of you that are you know, wanting to hold positions for a longer period of time. I do not trade options. ETFC. Okay, ETFC, and actually broker-dealers and brokers have been really powerful lately. That's one of the reasons I bought IBKR, that's Interactive Brokers. So all brokers have been acting very bullishly. ETFC is no exception. I could see it definitely moving higher. Let's take a quick look on the weekly chart. Okay. All right, let's weekly chart also suggests that more upside momentum is on its way. And the monthly chart, look at the monthly chart right here. So after this sharp decline right here, monthly chart suggests that it can have more upside all the way into the $40 area. So all the way into this congestion area. So it does look good to continue higher, both swing and for core. Okay, how about shorts? I do trade short. I do take shorts as well. However, I do have one on watch. I'm not going to lie. I have Urban on watch. Because we are in a very strong market environment, I love to pick stocks that have really good, strong momentum to the upside. But I do trade. I do take short trades as well. Okay, I don't trade options again. Apple. I actually looked again at Apple. I love Apple for the long side. Apple formed a really nice buy pocket here, residing above the 20-period moving average, and has more upside to go into this double top right here at about 134. So it does have room to move higher. Yes, my system, it's basically not a system, but it's a strategy. So my strategy works on any type of accounts. The key to trading smaller accounts is to share size appropriately. And I do talk about that in the weekly strategy sessions.